Matt from the Trade Brigade here doing a technical analysis on ticker symbol NIO for NIO Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will of course be an update. We talk about the stock regularly here on the channel. The main thing to point out is that we are still holding the inverted head and shoulders neckline around 25. However, we didn't have the most promising type of candle print on today's session. So a little bit of a failed break. We even took out the prior high of day, got into the remainder of the gap here, and there was just no response from the buyers. As a matter of fact, it's exactly where we rolled over for resistance and closed fairly weak into the end of the day. As of right now, again, as I've mentioned, it's not overly concerning yet, because we are still above the neckline of the inverted head and shoulders, but we have equal lows in here. If this area starts to flush, then we have nothing more from the daily perspective, at least. Here's an area of balance, right? I would look at this as a look above and fail. If we start getting acceptance underneath 25, we know that the target should become 23.10, okay? So that's the bear case scenario here inside of NIO, especially with the inverted hammer that printed on today's session. I would be very mindful of that scenario into the remainder of the week. If you're someone who's really aggressive, really bullish on NIO, I could see reasonably trying to go long down here if we get some sort of double bottom, some sort of inverted head and shoulders on a small time frame, something like a 5-minute, a 15-minute, fine. Break of the neckline takes you back higher, at least up to the balance highs that we've seen in this section of the chart, but you need to have a stop loss underneath 25, right? Because as we pointed out, if this is going to be a look above and fail, target's going to be here at 23. You don't want to be holding long through that move. So if you're not a disciplined trader, if you can't stick to a stop loss, trying to bottom fish here is not the trade for you. You should be patient and wait for the break up and over 26 to continue to fill the gap closer to 27.20. So that's what I'm thinking about inside of NIO. Those are the two scenarios to really be watching out for. If you enjoyed today's video, the recap here, let me know in the comments section or by giving the video a thumbs up. One last thing actually that I'm noticing out of the corner of my eye before I cancel it here, or not cancel it, but wrap up the video. There we go. Support trend line, right? So very, very simply put, if we're above the support trend line, have more of a bullish bias looking for that breakout. If we start to crack it, we know that 23, rotation to the bottom end of the prior balance could definitely be in store. So that's one extra tip for you. That's truly going to wrap it up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.